The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, Tiger Technicians Hour on May the 1st, Wednesday. We're looking at the Dow up 60 at 37,876. Had a little juggling and jiggling session so far. This dreaded H with a low of 37,753. This is the pattern that we often look for. Can it be saved? Can we move higher? It's going to be a big question here. Come down sharply, rally to a peak A or B, and then fail and take out the left side low. What happens by the close today? We'll be watching very, very closely. Meantime, it's holding quite good, quite well. The technicals are kind of shaky. Certainly that 9-period moving average is way below the 14. Let's just get this right. Yes, close, right. Yes. So one thing that we want to look at here, let me just do this real quickly here. This is the E-mini. So if you look at the 10-minute E-mini from the low that was made, at about 50.36, somewhere around there, you've gone up, and that 9-period moving average is held. You've gone to your peak C. Is it possible that we actually get to a D above this resistance at 5,061? That's going to be a really big question. We'll see if that's possible. And it might be that you have a session. You've had one session now in the morning from 10:20, from about now, actually. You have another session, and then going into about 1:30, 1:45, market just stalls, waiting for the Fed, and then you have another session. We'll see. Could be a very interesting microclimate we've got. Let's just get going here. We'll look at the market. So the Dow is up 55. The S&P's trading right now at 5,023, down 12. It's come back quite nicely from the low of the day, which is at 5,016. So we'll see what happens. Look, that 9-period moving average, what a nice technique that is. Look, you've been negative and it stayed negative. Almost tried to go positive yesterday, but it couldn't do that. Very sharp pullback. And now you've got the QQQ, same thing, down 2.28. This, of course, got micro, advanced micro. Got the semis. The semis are, let me just check here. The semis are they trying to rally? You have the semis are down 4.5 because advanced micro really took it for a loop there. Let's see what advanced micro is doing right now. AMD trading, down 10 at 148. Almost went to the 144.74 200-period exponential moving average, testing the low of about a week and a half ago. Ooh, this is going to be tough stuff. Well, look, let me see what NVDA. Very, very ugly, down 28 to 835. So we'll talk about all of these in a moment. Let's just finish up. We've got a QQQ, as I said, down 2.8. You've got the IWM trying to rally earlier. Now it's only down 7, holding better than the others, but still not acting very well at 195.81. Gold is up 15 at 2318, making lower lows and lower highs. I'm watching this 9-period moving average. It's just gone pink today. It started off yesterday, but we'll see if it's able to hold that today, because that'll say that the 2339 area is going to be very strong resistance, and it needs very much to hold. I would say 2285. Meantime, let's look at silver. Silver is up 16 cents at 26.82. Yesterday, the 9-period moving average turned negative. I wouldn't fight that. Next thing we're looking at is high-grade copper. High-grade copper, very sharp intraday turnaround yesterday, down 0.02 at 4.54. I'm watching this closely. It's been a spectacular move so far. ABC, that is the C right there. That's a D. In-leg D in the weekly chart, so we've got to watch this very closely. Leg D in the monthly chart as well. Very interesting. Okay. I would say 4.45 is really the number to watch. And that is SCC. I was asked if I'd look at that. Sure. 121 round number high isn't that interesting? I've written down a whole bunch of things. Maybe I'll do some kind of a special or something on these round numbers. 121 round number high, all-time high in Southern Copper. It's trading now just down a little bit, down to at 114.70. I'm not sure if this is the big turnaround, but look at this. Look at the measurement on the left. Let me do this for you. You can see the vertical test. Fabulous action going to the April about the 14th. Goes to a new high at 120. I think it was just over 120. On the 13th, it goes to 120.37, but it had 120 round number open. Pulls back, has another big bounce, and goes to an all-time high again. 3 sessions ago, I should say. Hits 100, unbelievable, 121.00 round number high. And look at the technicals. The MACD was diverging negative. The stochastic was way under 80%. On-balance volume was way lower. The 9 period was the only technical indicator that was holding, and it's still holding green over the black. We're going to be watching this really closely. I think there's a short-term top in high-grade copper, but we'll have to see that based on the SCCO, that Southern Copper. Let me have a sip of tea here. So Taseko Mines had a fantastic move. It's gone from the 200-period moving average in the weekly chart down to the 136 area, and it skyrockets to 271. I mean, really, almost double. And it goes right there, peak F, and it hits, what did I say it was? 2.71. Trading now at 246, not a big deal, although in percentage terms, that's a pretty big down move. So it's a 0% change right now. This is a leg E in the weekly chart. I've got to watch these very closely because I think this whole rotational aspect is saying now some of these amazing commodities that have moved higher, and I'm including copper, crude oil in this one, not good. And I'm actually going to include, for the moment, you've got natural gas. Obviously, it keeps making lower lows and lower highs, but I am going to include URNM, uranium, because I've got to watch this very, very closely. Look at that. Look at the look how it came down sharply from that peak D. This is ETF uranium. This is the fund itself, spot uranium miners ETF. It's been holding very well, but a couple of them, let me just see what UUUU is doing. Yeah, a couple of them are not doing that well. And our UEC took a little bit of a dive yesterday, even though it's holding really well today. That was an ugly red candle yesterday. So I'm watching to see if uranium is the outlier in this whole move in 2024. In this year of 2023, it was fabulous. Let's see what happens in 2024. Can uranium start to go back to the RDM, uranium, this ETF? Can uranium make a new high, get to the 60 level? I think there are signs that it's a possibility. I'll be back in a moment. Basil Chapman, Tiger Technicians Hour, Basil.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
It's trading down 67 at 81.27. Look at that weekly chart. Still the 9-period moving average acting very nicely. It's at a peak D. The MACD is still strong. The stochastic's pulling back from 85% at 80% right now. It's still okay. On-balance volume is pulling back. I don't like to see on-balance volume pulling back like that. Let's get to the VIX index. I was asked about that. Actually, yeah, I'll get to NVIDIA in a moment. Both GE and NVIDIA we're looking at. And I must say, I'm not getting some emails from some people that are regular emailers. I don't know whether I've got a problem. I do have some kind of a problem. I haven't been able to resolve it. I'm trying to do that on one of my platforms, and the other platform seems to work okay. So I'm not quite sure exactly what's going on. So the VIX index is up 42 cents at 16.07. One of the aspects that is really important at this particular time, and I've spoken about, it's not just a bifurcated market, it is really becoming a mixed market. For instance, we've seen the Magnificent Seven. You're just peeling away. I think of those fighter jets, they're in formation, like a V formation, and then one by one they peel off and you've just got one left. It's kind of what we're looking at, the Mega Sevens. I'm going to be watching this very closely because I want to see where money is going to go to for the next big move up. And I think that's going to take a little time to resolve. Will it be something like the IWM? I'll get back to the VIX, which is the weekly chart is actually still holding pretty well. The 9 is over the 40. It's really close to turning negative. Or would it be something like ARKK? Do we suddenly see movement in the ARC innovation? I'm not talking about it in particular. I'm talking about those platforms that they've been buying some of the former winners all the way down. When those really do have a decent bounce, this thing should participate. It's not. If I look at the IWB, I did this yesterday. Remember, this is the Russell 1000. It's got this dreaded H pattern, but it's had a fantastic move to all-time highs up in the 290, just around about 290. Trading right now 275, not acting all that well. So how this resolves in terms of platforms, did Uber come out with earnings? Look at this, Uber is making lower lows and lower highs. just not acting very well at all. This is now the season for Airbnb, making lower lows and lower highs. It had a fabulous move to the, what is that? I don't even remember seeing that. Let me just see what that is. Is that a 200? That's not what is that? How did that get there? Input. Yeah, that is a 200-period moving average in the monthly chart. Light gray? Usually make it a little thicker than that. Anyway, it hit the 200-period exponential moving average in the monthly chart, and now it's pulling away, but that's still a magnet. You should try to get there again, and that's at the 168 level. Here it is at 156. So digesting those big gains, peak F in the weekly chart. Could be an instant restart, but I'm calling it an F for now. That's Airbnb. Let's just go on. We want to look at the HDX. I have to have a sip of water here. Yeah, it's that old throat. -2, I think I'm paying the penalty for those 3-day webinars that I used to have nonstop talking for about 8 hours. 646 down 2.74. Yeah, I'm watching this, and I think that the TBT, which is, I'm coming back to the VIX, remember, I do a circular motion here, has made some kind of not a short-term top, but some kind of a restive area, because that 9-period moving average is not even shrinking. It's still holding really well. The MACD just crossed negative. The relative strength index is making lower highs and lower lows. Stochastics now down at 71%. On balance volume is pulling back a little bit, and as a peak C in the weekly chart, well, it's a leg C. I have to wait for Friday's close before I can call it a peak C. So what can the Fed do? There've been numbers that have come out that suggest that the bias is still some inflationary aspect that's just leaning towards the upper end of what they watch all the time. This is my impression. So there's nothing that they can really say. They can't even say we will start anything until the next report. That's the way I'm seeing it. Now, if they start something before the next report, which will be, say, in a month's time, they're really jumping the gun. They can't afford to do that right now. Not only that, now we're getting closer to where anything that they do can be perceived as election-oriented behavior, whether or not it is. I mean, that's just the way it works in both the press and politics. So as it stands right now, the TYX, there we go, here we go. The 30-year T-bond, did I forget to do this? Yes, I did. So there's your peak F top right there. There's your start of a new buy signal to buy mode right here. And we've got a peak A, uppercase on the way up, A, B, C, D. I have to circle this because it is an instant restart, because within 3 bars, it did make a new high. So we do this, and we say now we've got parallel counts, so that becomes E/A, and then I just continue with the alphabet, E. When I get to G, I put G/C, so E, F, and there's your G, and G/C usually says, at least for the last year and a half, I've been emphasizing over and over that the G/C invariably goes to a D, and then you've got to be a little careful. So what did it do? It went to a D, and now we're being a little careful. That's the methodology. Just stick to the methodology, and we'll see what happens. That's the 30-year. This is the T-bond yield, TYX, trading at 47.59, 4.759%, down 31. And it's in a leg C. Now, it is interest rates, so I can't say that this always goes to a D. A buy signal should always go to a D, but when you get to something that is, it's kind of removed from your basic instrument, which is the TLT, which is really the bonds, and the past. Look at this peak D right here at 51.52 back in the week of the 27th of October. That did work, certainly. Came down under 40. I mean, these are bonds. This looks like a stock, right? And here it is coming back. I think it's going to go to a leg D. I don't know if it's going to break the most recent high that was made in the October. You remember this is when we had the reversal when the bond yield started to come down. That was the low in October of 2023. Well, this is the high at 51.52. So I don't know if we're going above that just yet, but so far the stochastic in the weekly chart is flat at 88%. That's really good. Look at that steady move up. So this is going to be, what do they say? What do they do? It's how the market perceives it, because I don't think the Fed could be any different today other than just a hint of something, either a hint of more negativity or a hint of positive. But I don't think they're going to change the trajectories right now. They're all in place. They aren't ready yet to move. I'll be back in a moment. Dow's up 54. S&P is down 50.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Folks, we're back now. So I want to just show this now because it's all relative. This is the 9-period moving average in the 1-minute chart is trying to turn positive. The weekly did pull back very sharply, but it's so fascinating. It's going to be tough, really tough, to see this 9-period moving average in the 10-minute chart of the E-mini, which is green, stay green. Because if it can stay green, even after this pullback, and then the price of the E-mini goes to 50, 55, 50, 56 in the next 10 minutes or so, that'll be a good thing and say, hey, they really are going to get a leg D in the 10-minute chart above 5062.25. Work in progress. All right, so now let me go through all the different things we were talking about. And incidentally, was that Buddy Rich that you mentioned there in the den? Yes, Buddy Rich. Wasn't Buddy Rich? Buddy Rich was the drummer for Benny Goodman, right? In the big Carnegie Hall performance of 1939, where the people actually for the first time started dancing in the aisles. Never seen that at Carnegie Hall. All right, so let's go back one thing at a time. Let's go back, and we're going to look at the I'd mentioned NVIDIA. So NVIDIA was the darling. It made a 974.00 round number high the week of the 10th of March. The actual date was the 8th of March. And then it pulled back. It did this exact double top we were looking at, and whatever it was a moment ago, we were looking at the left side and the right side, which was much weaker. This is the same thing that happened here for the high of the 8th of March. And then around about the 25th of March, that high was not accompanied by a MACD positive. It was actually, it deflected even lower, and the stochastic was much lower. On balance volume was a little higher, but then all of a sudden it turned down. The 90, we were waiting for that to turn negative. Eventually, around the beginning of April, it turns a negative, and it's still negative. That's a really nice indicator. It's still negative. It was really close the other day to maybe turning up, but now it's pulling back. NVIDIA is down 24. My suspicion is NVIDIA is taking a well-worn breather. The 9-period moving average over the weekly chart says unless it starts to trade at 680, at 970 was the high, 974, 680, round number high. Until it comes back, that's 762, round number low. It's had a beautiful move. I mean, this is a really good move to the 50% retracement. But here's the issue. The issue is the 9-period moving average is still negative. So this is a very important digestive phase for NVIDIA. I don't put into the category of no earnings, this earnings, that earnings. I'm putting into the chart, that's all. But if you look at GE, what I've mentioned forever, GE's been spectacular. But right here, I'm watching GE very closely. Yes, they've heard earnings. They deserve everything that they've got from the low that was made in about the 38s down in 2022, screaming to 166. Fantastic. I've talked about GE having turned around, being one of those companies that turned around and has morphed and become an absolute winner. Now it's just ready for a bit of a digestive phase. Even though stochastics at 86, the MACD's turned negative. Relative strength is still good, but it's pulling back. On balance volume's a little overbought. So I don't think there's a big turn down. I would say the whole area of 148, 100, well, first of all, 152 is going to be very important. The close under that says, whoops, we'll go back to that little gap that was formed right there, the low of the 23rd of April, 152.82, and the day before had a high of 151.91. So you could see that gap being filled in. But that's just to say that it's taking a breather. But even the weekly chart is still fabulous. All right. So there's a big difference. But the price is the price. And you've got to assess something in relation to what it's doing, regardless of earnings, non-earnings, whatever it is. And then you can do your assessment, fundamental or technical, whatever it is. I'm doing it purely technically. So that's that. And now I just want to finish up with that VIX index to say that how the VIX index closes today is going to be very important because it's at 1590. It hit 1622. It actually rallied quite sharply, even though the market wasn't down that much. So I'm suspicious about this. I'm saying there's a good chance that regardless of what the Fed does, the market on a very short-term basis is trying to find some kind of support, some kind of leadership role. You can even see it. I mean, it's being exemplified by the micro. Look at this. Here's the micro. Now you've got yourself a leg C in the 1-minute chart, your leg B in the 5-minute chart, and you're finally getting that move up in the 10-minute chart. And that's the kind of relationship I want to be seeing in the market, to say whatever the news is, look at the result of the price. What is the price doing? The price right now says that the VIX index has had a huge move down from 2136 down to the 1463 low that was made 3 days ago. Now it's had quite a bit. So scratchy throat. And now I've got a sneeze, and yet I'm feeling 100%. What is this going on here? All right. So what we're looking at is how the VIX acts at 3:05 this afternoon, 55 minutes before the bell closes. If the VIX is below 15.35, this market is going to go higher in the short term. Oversold, going to have a little bit more of a bounce. If, in fact, it starts to rally and gets at 1587 right now, I would say that if it goes to 15, the high today is 1620. If it goes to 1590 and holds there in that 3 o'clock period, that's going to put some pressure on the market. All right, just make it as simple as possible. I did that. I did NVIDIA. I did GE. I did the VIX. FXI has been doing very nicely since we spoke about that low that was made way back at 20.86 in January, week of the 20th. Look at this. That is not an A. Remember, you've got to move to the right. You've got to make a trough before you can start counting the peaks. So that is not an A. The week of the 20th, it has a high. This is the China large cap ETF. 23.10 was the high, and 20.86 is the low, and 22.60 is the close. But it's the next day with a higher low. That starts your count. So that becomes A, that becomes B. It's in leg C right now at 25.71, pulling back. Yesterday pulled back quite sharply. Today it's up 22 cents at 25.71. So what have we got here? Oh, I haven't finished this. So this is going to be the start of a new move. Yeah, so let's just do this. This is, update. I don't want any updates right now. Okay, there we go. So that becomes A. Right there. That becomes B. This is C. Yeah, this is still doing very nicely. Leg C in the peak C in the daily, leg C in the. Oh, time's flying. So I haven't even got your question. Oh, GDX. So the GDX. So I love this. Just in your face. It's just amazing how this works. The GDX is up 60 cents to 33.29. I'll talk about something that I missed yesterday. Had planned, changed the plan, and now today it's working. That's the way it works. Dow's up 72. I'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
I was asked about GDX. So look, here's GDX. It's up 8 cents right now, 33.21. This is the gold miners. Remember I said here is this Chapman Wave inside track repellent zone. And all I can say is I've drawn it in. It has cyclical rhythms and all that, but that's really not the point. The point is it's proved itself to be a very big distraction to the gold miners powering higher. It just doesn't allow it to get the veracity to be able to punch through and turn it into a support level. So this means that the inside track repellent zone at right now with a high that was made at about 30, let's call it 35, has 35 to, and it's a declining one. So this month will be slightly lower, but let's just call it for now 36.50, right? When the GDX, and it will, when the GDX finally starts to trade in the 37.80 to 38.20 area, that means this becomes support. Until then, it's a barrier. Well, it turns out that it made a peak D a few weeks ago in the daily chart, weekly chart, I meant to say, 35.70 something, 35.75, I should type that in, 35.75, and it's just going sideways. It's not doing anything, but it hasn't broken out. It hasn't broken above. The 9 weekly EMA is very good. It's way over the 14. The MACD is very strong. Stochastic's fabulous at 84%. And the on-balance volume is just not even a tad overboard. It's doing well. So that means that the price is telling you that gold is in play, but is having a digestive moment. And you can see that here by this dreaded H pattern. Look, remember, what did we see earlier on? We saw this right here. It comes down. We saw it in a couple of different charts. Goes to peak A and fails, takes out the left side low, but within the rule of thumb is within 2 bars, maybe 3, but in 2 bars, it has to close above the left side high, which it did, and move high. And if it goes above the arch formation, that's the A. And let me do this so you're talking apples to apples. There's your A. There's your A, uppercase on the way up, but it fails, takes out the left side low. So that means a failure. This is a successful A right now, but it's still a gray A because all the technicals are negative, even although the 9-period moving average is still positive. So that says, so what do? I make that gray. Just takes a moment. This is a gray failure, right? Why is it gray? Because I don't even have a buy signal working right now. It's still kind of a negative pattern for a second arch formation. But that 9-period moving average hasn't crossed negative. So as it stands right now, yes, we're making lower lows and lower highs, but you can see that this pyramid that you've got here is actually an almost exact, it's a funny expression, almost exact. Isn't exact? What is this almost exact? Well, it is. It's almost exact. It's almost exactly from that high that was made from the left side. Look at this. You can make that pink. Next one. Where do we go? New. Make that pink. And within a day, it took it out, but then it ran up again. So there's your Eiffel. That's actually a pyramid formation. Comes out, and now you've got another one. Is this one going to fail? Well, that's going to be the big issue here. As I see it, is more consolidation. Now I'll talk about what I missed, because I like to clear out my conscience to say, hey, I mean, you plan these things. Why are you dumb? So I said ASA, which is a South African gold company. It's a fund, really. That's I believe it's registered in Bermuda, but it's got 5 or so South African gold stocks. ASA, Gold and Precious Metals Limited. One that we always follow, and I use it more as a guide than anything else. Once in a while, we'll try to get it. Well, we missed it, and then it ran up, and it went to 17.75 on the 12th of April. It made this dreaded H pattern once, and then it pulled back very sharply. So I said, let's try and get it. And I had different levels. I wanted 1720 something, and then I lowered it. And then yesterday, I took it out in the morning. I said, let's get it under 16.98. And I thought, gee, gold is looking terrible. I mean, it's just terrible. I don't know if I want to get it right now. Look, it's making this pattern. It's going towards this Chapman inside track repellent zone, right? I said, nah. I took it off. Well, what did it do? It went to 16.90. So we would have got it by 8 cents. And today it is trading at 17.59. So I'm not making a big fuss in the sense that, oh, we can't get it again. It's just that if it made that arch formation, then in this area, yeah, I would have felt a little bit better about getting. But purely on a technical basis, this is fantastic action because the 9 is still very strong over the 14. And now the pattern that I'd been looking at, did all my homework for, was this cup formation, and to the exact low right there from the 1775 high that was made April or May of 2023. Look, this was to get to that level, 1775, by right there. This is it. This is the week. So what's today's high? 1769. Missed it by, the week is young, it's a weekly chart. So this is your peak C right here. And now the problem is that it's getting to an area that says the upside could be a breakout, but more likely now it's going to start getting a little choppy and go sideways without really breaking out. So I wanted to do good, and I thought to get it in the 17s when my target is 1775, and then I have to assess, I wanted it deeper down. Well, sometimes you miss things. You do your homework, and that's very upsetting. I'm sorry, subscribers. That's just, I mean, we would only be up a little bit, but the point is we would have grabbed it. And look, the 120-minute chart had this beautiful double cup formation. And here's this target. It went right to the target. And the 9 didn't, on that pullback, it didn't go negative. In fact, it stayed positive, just like we're seeing in the 10-minute chart. I was asked about the Chapman 2-click. I didn't do this. I started off doing it, and then I thought, nice profit. I'm just going to take it. I'm going to do my show, blah, blah, blah. So I didn't stick with my rule of thumb. And look at this. Here's your 10-minute chart and the E-mini. Look at that. Walking. I spoke about this a few minutes ago, that if the price pulls back and the 9 EMA is still holding, it's like a spring-loaded move to the upside, and it should try to tackle, at least in this case, 5,056 right now. It should try to tackle the 5,060 level in the E-mini. Isn't that interesting, huh? All right, let's get back to our story. I think I've covered almost everything. Okay, now comes the big question. So yesterday, folks, if you aren't members of the Tiger's Den, it really is the information and the traders, the people that we've got in there are just fantastic. Anyway, someone came up with this thing saying, it just came across that the marijuana is going to be elevated from a level 1 to a level 3. I think that's the way they did it. So that de-elevated, let's put it that way. So it's now under a different substance in the drug area. But at the same time, I thought, am I going to send out something now? Let's grab this. I was going to say, but when it comes to this cannabis area, you can't hold anything as sacred because it changes all the time. So MSOS is the advisor share pure U.S. cannabis. We had this a while. We aren't in it. We waited. Had this huge spike from the 8s to the high in the 11s yesterday. Now it's down 10%. So is the MJ. I would say just be careful here. The rumors, the stories, it's tough. I'll be back. 1,000.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26, so there's still time to sign up. For this month only, use code LarryLive at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26, Tigers. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So MJ, this is the Alternate Harvest ETF, down 11%, down 54 cents at 429. I think you've got to be real careful. This is almost like this two-click session that I was talking about in the den, that if you can get the low, and then you can just sit with it. And that's what I'd say to subscribers. So we are not in it. In the sevens, I said, oops, I wrote that in the wrong place. I said, if you want, you can sit with this. It's going to have big pop-ups and all that, but it's maybe later in the year when it becomes really political that this could have the biggest move. And I kind of still feel that way. It's a really tough thing to do. But a longer term, I'm saying that if this MSOS, the advisor shares, pulls back, if you're a longer term investor, I think that this is in play. I just said that I can't do this for subscribers, but I can't see it go from, say, the 9s down to the 6s. I can't 30% decline. I don't want to do that. I'd rather be buying higher highs, or at least some base that I'm looking at. All right, so that's that. The next question, final question, was about the auto show I went to last Friday. That was a local Boston auto show. I didn't realize that when I went into the the exhibition hall. I said, gee, this is a lot smaller than the auto show, the usual. And it was. So it was local, and it mostly had EVs mixed in with the SUVs, a lot of those, a lot of trucks. So it was very different. There were no Chev Corvettes, there were no Jaguar, none of the cars that I always like to look at. And so that was kind of disappointing. There was nothing. My friend and I, we walked away and said, there's nothing here that I especially would want to drive home. Not that there weren't some terrific cars, just nothing that kind of excited me in that way. All right, so let's do this. Dow's up 90. What do we do after the Fed talk? I just said to subscribers, if the Dow is up 180 after that and holding well, it really has to have a big move to the upside. That's going to be a positive short term. But if it starts to fail and it's down 120 or so, that just says that 9-period exponential moving average, we just sort of keep monitoring it because they're all negative at this particular point, and I'm worried the SMHs are down. So I'm going to say have a great rest of the day. Stay tuned. I'm going to maybe do an